Now, I want to start today talking a bit about, so Shannon Smith from Smart Business Solutions Financial Planning. I want to talk a bit about investing in commercial property. Now, there is another video that I have done of investing in property, but I did want to have a chat separately as to what I mean when we talk about investing in commercial property and whether that might be an option for you to look at it. Now, just remembering that I am not a real estate agent. I can't tell you which property to invest in, which one is going to grow the most. I can't do that for you. I'm not a licensed real estate agent. I might love property, but it doesn't make me a property expert. But I can definitely crunch the numbers for you, and I do very much enjoying that. But now, if we look at investing in property, commercial property, it could mean a warehouse, retail space, childcare facilities, restaurant, hotel, car parks, medical centre, and even digital billboards. So when you're looking at commercial property, there's a number of different areas. Now, some of the pros, I'm going to go through the pros and cons with it, because I know there's a lot of people who are a bit skeptical on investing in commercial real estate because they think, it's high risk compared to investment in residential property, but it actually can have some significant cash flow benefits, greater rental certainty due to longer rental periods, and fewer outgoing expenses since the tenant has to pay for nearly all of it. So if you do your research, you really could find that may not be the case. Now, it's always going to be dependent on it, but some of the pros of commercial, generally there is a higher return on investment compared to residential properties. Look, a warehouse could give you 8 to 10%, whereas a rental return on a residential could be, the CoreLogic stats said 3.6% on average. So obviously that is going to differ depending on the property. You will have a longer lease period because the average lease for a commercial property is 3 to 10 years, whereas a residential could be 6 to 12 months with no guarantee of renewal, whereas commercial tenants tend to stay, particularly if they've invested some capital in acquiring the property from the outset, so they've done a fit out and things like that. It's just too expensive for them to move. Fewer ongoing expenses for commercial properties. Tenants generally pay the rates for water, council, insurance, body corporate fees. So there really are fewer ongoing costs compared to a residential property. Value adding, activities for well chosen. If you really choose the right commercial property, tenants are likely to make improvements to the structure and layout of the space, which could increase the property's value. And as the rent is reviewed annually, it could actually mean you end up charging a higher rental, which reflects the upgraded premises that you didn't kind of pay for, if you get what I mean. Price stability. So the value of commercial real estate is set by expert property valuers, and it basically has shown that they have lower levels of fluctuation compared to other investment types. And price appreciation. Lease agreements can often have terms of fixed rental increases in accordance with inflation. And because values are based on the level of rent, commercial property prices tend to rise over time. Some of the cons, though, to be aware of on commercial: lack of research. Some of the greatest drawbacks in investing in commercial properties that there can be a lack of property knowledge and research, letting the wrong tenant in or not inspecting the property adequately. There can be untenanted periods. So commercial properties do run the risk of being untenanted for extended periods of time, such as months, could be even years, which may mean you have to cover expenses during the interim until you find another tenant. They can be vulnerable to economic factors, so as an economic downturn, rising interest rates, rising unemployment, or poor business confidence may mean that there's less demand for the commercial property, which could also mean it's difficult to find quality tenants. And there can be costly upgrades, although the upgrades will depend on the situation. But renovating an office, or, it could be a lot more expensive than some parts of renovating a home, just because of the scope of work, maybe removal of asbestos, fire and safety issues, changing fit out. You might actually need to do, town planning or something like that. So there can be some of those factors to think about. So commercial versus residential. It's important you understand the differences between the two. The key difference would be commercial lease agreements are generally for a longer period compared to residential. Vacancies between different tenants can be longer for commercial properties, and unlike residential property investment, there is GST with the purchase of the property. So and also potentially the income and expenses. So you will need to allow for an additional 10% on top of the purchase price if the property is vacant. Good news is you do get that GST back, but just be aware of that. And maintenance expenses are typically covered by the leasee in a commercial property, which means rental income is generally higher than the return of a residential. So commercial investment objectives. So before investing in commercial real estate, you really need to think about what are you trying to achieve for the investment. And this goes with any investment. For instance, you may want to think about the purpose of your investment, such as one of the following. Are you buying a commercial property to operate your business? Because that may dictate what you're looking at buying. You want to rent the property from your super fund or rent it from yourself. You want to diversify your portfolio. Maybe you've already got residential investment and you want to invest now in commercial. What do you want from an income level, capital growth, what tax benefits? Like a newer property will obviously give you better tax benefits. And also then the degree of, risk that you're comfortable with taking when you're looking at investing. So finding the right property, you need to be aware of the local prices, market conditions, look at council restrictions and zoning. Always look at that when you're buying a property, and the condition of the property, including any safety hazards. It's important to think about location, is it near a transport hub, surrounding business enterprises that maybe could support any tenant that comes in, as well as lack of similar properties in the suburb to ensure that there's not an oversupply of, 200 square metre factories, 20 in a row, if you know what I mean, because that does happen. Infrastructure developments, review any other infrastructure plans that are potentially coming up. Try and find out from council what else is in the way that may be impacted. Look at your tenant quality, finding a good strong corporate or blue chip tenant that has financial resources to meet the rental payments and is unlikely to default is obviously a great outcome. And you'll see that advertised if they do have that. You should also review the business model, brand assets, annual statements of any potential tenant to make sure that they're appropriate. And building structure, consider the structure or the bones of the property and whether the layout can be easily changed to attract different types of tenants, so you're not really fixed into one type of tenant. A multi-purpose space is going to just help you with getting a wider number of tenant possibilities coming in. So what are some of the factors that influence commercial real estate? A major factor would be that influences the growth is really a lot of the economic indicators, such as population growth. Could be interest rates, infrastructure projects. I know on the peninsula when they were talking about the port in Hastings, all of a sudden all of that space around there went up in price. Population demographics and population growth are going to be some of the key factors that you might want to have a look at as well. So what are the risks that you might have in investing in commercial property? It is going to be vulnerable to economic shocks. So downturn in an economic downturn, demand for commercial property will generally fall due to sluggish economic growth and maybe poor business confidence. It's also important to consider whether or not the investment may be susceptible to major economic downturns. I mean, if it's medical, maybe you're not going to have that situation. Again, that comes down to your risk profile and your investment strategy. Lease terms, while long lease terms can be advantageous in providing rental certainty, they can also present a risk in the sense that it may take you longer to find a tenant once the premises is vacated. So if your property is vacated for an extended period of time, you'll need to be ensure that you're well equipped to cover the costs until you find that next tenant. Property size, keep in mind that larger commercial properties may be more difficult to lease than smaller and will be typically more expensive to hold. And then changes in supply. Basically, it's a good idea to keep tabs of what's going on in your area. For instance, if there's a whole new, I guess we're seeing it in our areas, a whole new paddock that becomes now a commercial area with lots of new warehouses. We saw it in Carrum Downs actually when they did all the new warehouses. Lots of people wanted to move out to those locations and be in the new factory and not the old one. So some of the tax tips on property investment deductions. This is the amount that basically you can deduct as your taxable income. So you've got your income. Keep track of all your expenses. Generally speaking, outgoings for landlords on a commercial property will only be the interest on your loan, land tax, agent fees, some admin costs on the leases and bank charges. You could prepay the interest and you get to claim a deduction for interest when you actually pay it. And then you've got non-cash deductions, which are your capital works and capital allowance deductions. So obtain an expert depreciation report for that. Let us know if you need us to let you know who to speak to about getting that done. But it will pay for itself in its first year for sure. Capital gains taxes, and just to keep in mind that the cost of the asset property is the cost base for capital gains, which is the cost when you bought it. So keep all of your other extra information that is related to the acquiring it, holding it, and then potentially disposing of it, because that will impact your capital gain when you come to sell it. We try and minimise your taxes. So I hope that gives you a bit of an overview of investing in commercial property. If you've got any questions, whilst I can't tell you which commercial property to buy, I can talk about the different areas of investing, and I can also crunch a lot of the numbers and have a good chat to you about property anyway, because I love a good chat about property. If you want any advice on that, or you want us to crunch some of the numbers, happy to do it. Get in touch and we'll help you out. Thank you.